the first batch of presenters played by the rules, but now sometimes a company, especially when it's the boss men, the boss ladies not so much, they come in here and they just quickly present and they didn't see how we do things. So let me tell you how we do things. If you think you're one of those seagulls that fly in to come and shut over us and fly out again, let me give you the ground rules. Okay. The ground rules is you do have 10 minutes. Take the clock back. You can't steal the first person. In 10 minutes' time, we've got 5 minutes for quick-fire Q&A. Okay, it works well. In the background, we do ask the audience to go on Slido and just express a view of, is this a company that they will be paying attention to? Is this a company they may invest in, or perhaps not yet? Just as a sort of a bit of a direct feedback. Okay. So don't be offended. This is how we do things down here south. We are, we're blunt and straight. Even in the White House, we talk like, we don't like each other sometimes. So that's how we're going to do it. So please, thick skin, be quick, and play by the rules. I'm sick and tired of this diary of a logistics person. I know more about logistics than what I intended to. This notebook was found outside at the coffee station. 500 rand. I've got 500 rand. Anybody more? Can you call it dollars? $500. It's come. If you see somebody looking desperate, I still think from the handwriting it's too neat. It must be a lady, but I may be wrong. Okay, so we are only 2 minutes late. I will catch that up. We are going to talk about copper, Mwelwa, Manda, all the way from somewhere far away. I don't even know where Zambia is. It's up north far. Come, you've got 10 minutes, young man. Thank you very much.
Thank you. Thank you.
Guys, if you want to clap, clap. If you don't want to clap, come, get into this thing.
Cheers, Bernard. Thank you for the ground rules. So I'm going to, as our lunch settles, I'll talk a bit about copper, confidence, the country. My name is Mwelwa Manda, not Mwelwa, from Zambia.
I try.
And I'm the country manager, Zambia, for Prospect Resources. So Prospect Resources is an Africa-focused developer of electrification and battery minerals. We have our primary listing on the ASX, currently trading at around 14 cents, market cap just under $100 billion. We're an African team, predominantly Zimbabwean and Zambian, and we do have a proven track record and expertise of exploring and developing tier 1 assets in the region. So we believe Prospect is one of the juniors that is leading the way in Zambia, operating in a tier 1 region in a copper province, the northwestern province of Zambia. It's the new copper belt. It's got outstanding regional geology, copper endowment, scale potential, and that's been demonstrated by some of the neighboring analogs, FQM Sentinel, FQM's Kansanshi, and Barrick's Lumwana. We have been in Zambia for about a year. We're established, proven. We're operating in an attractive jurisdiction. Zambia is Africa's 7th largest copper producer, as at 2024, and it's the 4th ranked in investor friendliness in Africa. So let me talk a bit about Prospect, our journey so far, and where we find ourselves today. So a few years ago, we discovered and developed the Arcadia lithium mine in Zimbabwe, which was sold to Huayu Cobalt in 2022 for $422 million US dollars on a 100% basis. This was after we had received about 13 million in investment from risk investors. So at the time, this was the largest private sector sale in Zimbabwean history, with Arcadia becoming one of the largest lithium mines, lithium-producing mines in Africa. The majority of the proceeds were of the sale were dividended to shareholders. We did keep some and retain a small portion in the company, with the idea of running it back, doing it again. So importantly for us, we also kept the team and eventually augmented the team following our entry into Zambia. So following the sale of Arcadia, we spent about a year really doing extensive BD, our focus reverted to copper in 2023, and we made the pivot into Zambia with the acquisition of the Mumbiji copper project. This is in northwestern province. We identified it, we acquired it, and when we did acquire it from the previous owners, we estimated from the work that they had done, we estimated about 40 million tons of a resource. Between July and December of last year, we drilled just under 10,000 meters, which led to an announced maiden resource earlier this year of 107 million metric tons at 0.5% copper, which is the average grade in that region. So we just below tripled what we bought. We also we now have an identified exploration target of about 420 million tons as a base target, averaging the same, 0.5% copper. Look, we believe we've got a very good asset, and I'll discuss a bit more on that later. So with regards Zambia and where we're placed, if you look at the map, we are right in the middle of a very interesting neighborhood. So we're surrounded by, to the west of us, probably about 28 kilometers to the west of us is FQM Sentinel. They produce about just over 200,000 tons of copper per annum at about 0.49%. And to the east of us, probably about 30 kilometers to the east of us, is Lumwana, owned by Barrick. And they do about 118,000 tons of copper production per annum. In the region as well, in Solwezi, FQM have got another asset called Kansanshi, which I'm sure we're all aware of, 135,000 tons per annum at 0.63%. So we're in a well-established region, transport, power, water infrastructure, mine force, and some downstream copper and refining facilities. So with regards, speaking about FQM, recently Prospect completed an agreement to align FQM as our strategic investor at group level. So coupled with additional investment from Eagle Eye Asset Holdings, based in Singapore, we now have FQM on our share registry. So on FQM, they own 15% of Prospect as a cornerstone investor. Their record speaks for itself. They've been in Zambia 25 years operating, 3 producing assets, extensive knowledge of the space, and essentially our big brothers. Eagle Eye Asset Holdings, they've been a long-standing supportive shareholder. So following that transaction, we are now fully funded to accelerate future exploration and development in Mumbaji. Zambia. So speaking about Zambia, we, as a country, launched an ambitious national strategy targeting 3 million metric tons per annum. I think what I'll do on this slide is if you just look at the graph on the right, it kind of explains, it's what I use to explain how the government and us, the players in the space, are looking to achieve this target. So if you look at the bottom of the funnel, the existing production is about 820,000 tons per annum. The expansion projects, so that's like the S3 project at Kansanshi, the super pit at Lumwana, that should account for about 485,000. The troubleshooting of existing assets, you've got assets like Mopani, Konkola, I'll add Lubambe to that. That sits at about 420,000 if everything was equal and operating at optimum. And then new finds, that's where we find ourselves. So ourselves, Anglo with Arc Minerals, the likes of Cobalt, they sit within that new finds, and it's a big gap to fill. That's about 1.5 million tons. So our target is 3 million by 2031. Good luck to us. Mumbaji, I won't spend too much time on this asset, but really just as a summary, we have 2 large-scale mining licenses, as shown in the map. As mentioned, we've got a resource estimate of 107 million tons. We have started phase 2 exploration We're looking to do 18,500 meters this year. So we're 2 weeks into that project. It's a nice map for the geologists, so I will run through this quite quickly as well.
Are you a geologist?
I'm not. I'm a finance
thank
guy.
God.
So
You and I can talk.
Yeah. So if you have any questions, Bernard will answer them later. So Nyungu Central is where our focus has been. We will follow it. Like I said, 18,500 meters is the target. We will be doing some chargeable IP anomalies throughout the region. We'll be reinterpreting some historical Anglo data. And I think one of the other activities that we will focus on is areas outside of the Nyungu corridor as well. So we're looking to explore the entirety of the license. Just quickly on copper, as we know, there's a rising demand in copper, tightening supply. We feel that major mines are aging. Very few tier 1 copper assets are in the pipeline, even less are being discovered. We also feel that many mines are getting deeper, quickly being exploited and getting expensive to exploit. There is a price incentive. We have maintained the 10,000 per ton sustained. And as I think has been mentioned a few times in the conference so far, copper is seen as an essential transition metal. So I think maybe just an interesting demographic shift is that in 1950, two-thirds of the population, which was 2.5 billion at the time, was rural. And where we'll be in 2050 is that two-thirds will be urban, and it will be a 10 billion population. So I think with regards the growth, the need for energy, the shift to transition metals, we feel that our project is well-timed and positioned to take full advantage. So what next for Mumbaji? I think some of the key things to highlight there is that in Q1, we had a very busy Q1, so we secured our mining licenses. We released a maiden resource estimate, exploration targets. We've started our phase 2 drilling. We're hoping to update our MRE by the end of the year and complete our initial scoping study. Metallurgical work continues as well.
Excellent. Do you want to highlight something, or are you happy that we...
No, just happy to. That's just a summary of what we spoke about.
So, thank you. Remember to follow the link and express your views online as well. I really am embarrassed. I'm going to put this first. It's not a question, it's a statement to you.
Sure.
I'd invest just because he is so cute. And that voice. I mean, really, people. You make me say that to this man. I mean,
Can she stand up?
For a small fee. For a small fee, I can give you the number. Okay. There's a number attached to this, but it's not a she, I'm sorry. Okay.
I get that a lot.
So why is the DRC beating Zambia on total production per annum? I mean, that's,
scale,
Yeah.
grade. It's a strange one because a lot of people they struggle with entry into Zambia, and I suppose it's a mix of a number of things, cadastre issues, license issues. So there's a lot of contested licensing in Zambia, which is something that is an ongoing battle, and so you have a lot of assets stuck and unable to. Companies like ourselves unable to unlock potential value. So there is a big gap to fill and a bridge to cross in relation to new assets and development in Zambia.
I personally like that sort of, I think it's your national sort of objectives that funnel Is that well bought in from government to industry players? I mean, are you all aligned to that as an industry?
I think so. I think firstly, government speaks in one voice. There's a lot of unison from the Minister of Finance, or the President, Minister of Finance, the Minister of Mines. Within industry, there's skepticism about the number. It's a massive number, moving from 800K to 3 million in, 6 years left. And there's also just not a lot of activity around exploration. What's in the pipeline from a development standpoint is quite low as well. But we are charging. We're doing what we have to do.
And if you were to progress as you are progressing or nationally towards that target, what are you going to run out of? Power, water? Where's the sort of
Definitely power. So we're in the middle of an energy crisis, a power crisis. 17 hours of load shedding, which is an improvement on the 20 hours that we've endured over the last six months. And outside of that, we have a target of 300 megawatts per year, new power requirement each year to match our growth, 2031. So we're well behind. So power is a big thing.
Obviously, from the same person who was distracted by your looks and your voice. Did I hear correctly, you expect to find a reserve of 1 billion tons within your license? What is it that you are expecting to find?
It's a target. We have a base target of about 400, which I think we will meet. I'm hopeful that we'll meet. But yeah, 1 billion is the goal. Yeah.
And this is where the people here want to now go into copper recycling and all sorts of things. Sorry to do this to you, but this is a question. How much copper re-enters the market from recycling and how much is sunk into permanent infrastructure? Is that an area you're comfortable to go
it's not something that I know. In general, when it comes to recycling, reprocessing, waste, even just value addition, Zambia is on the lower scale. There's not a lot of activity in that space. It's an area that's being encouraged, but I think we've got a fundamental problem from extraction, from access to ore, concentrate, processing, even before we talk about waste and value addition. So, quite a while.
It's perhaps one area where we as South Africa can help you. We are experts. We even recycle live electric cables. We just recycle it, as we go. So perhaps we can export some of those skills to your country.
Let's talk. I'll give you my private email.
Listen, thank you so much. Thank you very much. Let's see how you did there. You saw earlier that apparently it's almost cost-free to do inward listings, secondary listings. And I honestly urge everybody is if you expose yourself to a different jurisdiction, you create more interest. No. So come list on one of these many South African stock exchanges. So definitely going to invest. So how the hell are they going to invest? So they can't. So you have to do your bit now. Okay.
Sure.
Sure.
So we've got a buoyant market on the ASX. It could be as simple as one of these brokerage accounts.
You really think my 19-year-old son is going to bother for that when he can, through his online platform in South Africa, invest directly into South African shares? So please do that for us. Come on, think about that.
Okay.
This is what a copper CEO looks like when he lies. He says, okay. And he's got no intention of doing it. Thank you for your time.
Really thank you.
Thank you very much. Thank you. We'll get Capitec to extend their platform to the ASX even further. We're going to go to Bannerman Energy for an update. Gavin, where are you? Gavin. You know the rules.
Yeah, I know the rule.
You've been abused before.
No, I haven't actually. First time, so thank you.
But we've had Bannerman here. Are you first timer?
First time, yeah. So anyway.
I'll be kind.
Thank you. Afternoon, everyone. I'm just going to get straight into it. 10 minutes is going to be quick. Well, see, I've already lost 12 seconds, so I'm just rushing through this. So who is Bannerman? Bannerman's a uranium development company, ASX listed. We currently in the early phases of construction on the Etango project just outside Swakopmund. I'll go into a lot of these, I'll actually speak to later, but just around who we are. So our share price is bobbing around $3 at the moment. And we've got some fairly big long-term investors that are involved with our company, which add a lot of stability to us. We've been around this year. The original exploration license was pegged 20 years ago. So we've been around for a long time. So the people in Namibia know us, but a lot of South Africans actually don't even know Bannerman. So that's the reason why I wanted to speak, was to get our neighbors to actually understand who we are. So what have we done? And why do we say uranium is important? So uranium is really important, we believe, because there is a massive deficit. But what is really interesting is when you look at the split of where uranium is being used at the moment, the US is still the biggest user of uranium for nuclear power stations in the world today. By 2030, that's going to be China. And right now, the focus is on the utilities that are buying uranium are not seeing the fact that eventually there's not going to be enough uranium available. So I think previous speakers also put up the graph that shows the deficit, so I won't necessarily go into that in great detail. But we do believe in the thematic that there is a shortage of uranium in the market, and we know for a fact that last year we burnt more uranium than was bought by the utilities, which means that they are currently using up their stockpiles. So they're going to have to replenish. And if any of you follow US utilities, you would have seen that Constellation Energy puts a little note in their yearly or their annual report that they intend spending $3 billion on replenishing stockpiles. But the replenishment of that stockpile isn't just uranium. It's also obviously conversion, enrichment, and fuel rods. So over the entire suppliers chain, Constellation, which is the biggest utility in the US, is going to be, over the next 2 years, spending $3 billion. That's significant for us as a developer. This is the same graph, I think, but I've just enlarged the scale, so it looks like it's a massive deficit, but it's the same deficit that was put up here earlier. So there's a growing demand for nuclear fuel. There's a growing demand, and this is worldwide. I mean, even Germany, who's been so anti-nuclear power stations, are changing their stance on where they're going. So we are seeing worldwide, European, US, we are seeing a growth in uranium demand because of nuclear power demand. Where we see this tying into AI comes from the fact that the AI guys are now getting involved in our industry through the utilities. So we're getting a real aggressive marketing company getting involved in uranium itself and nuclear power itself by signing contracts with utilities. If that doesn't put energy into the uranium market, I don't know what will. So the way we looked at the project was there's a couple of things that investors look for. And if you count the number of greenfields projects in the world today, one of the first questions that you'll get asked, are you fully permitted? So we are fully permitted. We have mining license, we have environmental permits, and we also have Heritage Society approval. Do you have a proven team? I'll show you a slide on that just now. I know for a fact that my team can build this project. Do we have strong technical competence and commercial viability? Yes, we do. And the strong technical viability comes from the fact that we had a low period of almost 10 years where we actually built a demonstration plant and tested our technology to the nth degree. While we had a little bit of cash in the bank, we could actually carry on testing and improving that we have the right heap leach process for our particular material. Further in-ground leverage. So we're only going to build an 8 million tonne project to start. Our original project was a 20 million tonne project, and we've already done a scoping study to increase our scope from 8 million tonnes to 16 million tonnes throughput. So that's equivalent of around about 7 million pounds of uranium on an annual basis. And then what we've done, we have good money in the bank. At the moment, we've got just over 60 million Australian dollars in the bank. We've committed $22 million to construction works on site, and that work is all running according to schedule and underneath and below budget at the moment. And we've only used Namibian contractors, and that has been our status. And a Namibian mine, for Namibians, and that's what we're trying to drive. I don't have a single expat in my team in Namibia. Right, what else? So we've had lots of speakers from Namibia, so maybe South Africa can take a little bit of lessons out of the fact that it's actually quite easy to develop stuff in Namibia. And why is it easy for us? We are Etango, so we are 35 kilometers on a tarred road from Swakopmund, probably 45 kilometers from Walvis Bay on a tarred double freeway, which can get my product in and I can get my construction materials in with no problem. We've got 45 years already of experience of exporting uranium out of the port at Walvis Bay. That must be an advantage to us as uranium miners. We have excellent infrastructure. We have port, rail, and power. Power, we also are allowed to go as high as 30% solar, which we will do, and the rest will come from the national grid. And the national grid, I think somebody also quoted those numbers earlier today. They buy from Eskom, but they also have a fairly high percentage of hydropower that backs it up. We have a clear mining code, strong rule of law, and strong community. So if you go and talk to any family in either Walvis Bay or Swakopmund, I can almost guarantee you there's one person in that family that works on one of the mines in the area. Fully permitted, we said that already. I want to move on. I've only got 3 minutes, so I better move quickly. In terms of my team, I've got a strongly South African flavor to my project management team, and they're all people that worked with me when I was a project director on the construction of the Husat uranium mine in Namibia. I've got a fantastically strong marketing woman based in London who knows all of the utilities, and then my corporate office sits in Perth in Australia. We published our DFS a while ago, 8 million tons. We published it based on a $65 selling price, but right now, as somebody said earlier as well, the long-term price in uranium is 80, and we are looking at contracts in that region. So our baseline is really based on an $80 selling price for uranium. And this is the extension that I was talking about. So we can either extend our life of mine from 15 years to 27 years, or we can double up production and take the life of mine to 16 years. That will be determined by uranium price. I spoke about strongly risked, at least de-risked technically. That's a picture of our demonstration plant. We've tested every single factor that affects heap leaching, and we needed to do this because when we did our tests, we got such phenomenal results, and we knew that there was another mine in Namibia that had failed on heap leaching. So they were alkaline leach, we acid leach, but we've tested everything from grain size to acid dosage to acid concentration, and we've tested what the outcome is in terms of our heap leaching. Our heap leaching, for those who know heap leaching, is absolutely phenomenal. We get 80% return in 10 days, and we close it out at 22 days at around about 87% recovery. And we've adopted a phased approach, and this is to manage cash control, to make sure that we've got sufficient runway while we wait for the market to improve. So our main strategy is be prepared and be patient. When I say be prepared, the day after we got our mining license, we knew that one of the conditions would be we would have to start construction within 3 months. We started construction the very next day because we were prepared. And we're continuing to do that. So we've got a very good relationship with the mining ministry because we're sticking to our promises, and we want to continue sticking to our promises going forward. So what we've done is we've done our access road. We're busy with our extension access roads currently on site. We've got the bulk earthworks in because the key for our site is the heap leach pad, which, to give you an idea of size, this is probably the size of one cell, and we've got 10 of them. So it's 1 kilometer by 300 wide, so it's a large heap leach pad. And we've already got construction power and construction water on site operational, and we've never had to stop construction for lack of water, which I think is very key in Namibia. So this is just to give you an idea of what I mean by early works. What you're looking at there is the primary crusher excavation and the conveyor belt that takes you through to the main plant. This one here is just really showing you the roads, the overhead power, which is now live and ready to supply power to contractors. And this is effectively the start of the wet plant. This is the tunnel underneath the stockpile, and in the background there, you can actually see the start of the heap leach pad construction. And then effectively, so what does that mean? So what does that mean to us is to take Paul's analogy, takes Paul's example of surfing, is we believe that our surfboard is waxed. We've already ridden the first small wave, and we're ready to ride that really big wave. So that's where we are at the moment. We have appointed advisors who are looking at both debt and strategic partnerships moving forward. But on the be patient, we are waiting for the uranium market to climb to the level where we can sustainably achieve higher than $80 a pound. That's our plan.
Excellent.
Happy to
Thank
take
you.
questions.
Thank you very much.
No
Ladies-
geology note.
Thank you for that. You guys know what to do. Do it. Just a question. It can only come from, I know it comes from, it's like these Steenkamp scroll people. How likely is China to prioritize thorium-based fuel cycles given their relative larger reserves of thorium?
Probably fairly likely, but keeping in mind China is approving 10 nuclear power plants a year for the last 4 years, and those are based on uranium. So they will be the biggest user of uranium by 2030. I'm pretty confident of that. The US just moves too slowly.
There's a question, why is the mine limited to 30% solar power? Is this a contractual limitation, or does it affect your permitting?
Yeah, so it's a requirement from NamPower. NamPower is protecting their industry.
Sure.
They don't really want us to go higher than 30. You can put in an application to go higher than 30. But the problem is, if you put it in storage, it becomes expensive. So to go anything higher than 30 almost means that you're doubling up on what you need on a daily basis. So 30 makes logical sense for us from an economics perspective.
So Gavin, there's no comment about how sexy you are or your voice.
I know, I was
don't
very
know why.
disappointed. I mean,
I'm sorry.
I
I
should
mean,
be
that
sitting here with the old
guy's
top.
obviously taken, the guy who made that first comment. I just want to... so when I sit and I look at companies like this, I often see, and you do lots and lots of testing, is that a bit of a stalling tactic? You know, I mean, you buy time, you know, and there's no harm in that, but you buy time. And then often we see, we were going to do 20, but we're going to start with 8. There's a starter pack version. I mean, just speak briefly to that, because I think it is how we adjust to the reality of the world. No?
Yeah, so I mean, this is driven by uranium price. So when we were going to do 20, it was before Fukushima. Everyone was hunky-dory, and thank goodness we raised sufficient funds to drill resource and reserve for 20 million pounds. So when we came to doing the feasibility of moving it from 8 to 16, we didn't have to do any drilling. The drilling work is done, the geology is done. So it's really driven by what is the uranium price doing. And to sell a 353 million rand, at least dollar project, not rand, I wish it was rand, dollar project in Namibia is a whole lot easier than selling $1 billion project. Even though when we built USAP, it was 2 billion, but the Chinese didn't care about the price.
Yeah, no, thank you. I think that's just pragmatic, because you have to play to the space in front of you.
I think it speaks strongly to our strategy of be prepared, be patient, is when we speak to investors, they appreciate the fact that we want to try and achieve the highest price possible, because at the end of the day, the future value lies in your offtake contracts, not necessarily in your capital cost.
So definitely going to invest. I will unashamedly say, make it easy for us, please. Apparently it's cost-free. It costs nothing. There are 2 platforms where you can give South Africans access. So come on, man.
We do have a Namibian listing.
Have you?
Yeah. Okay. I thought I'd slip out quickly.
Okay. Ladies, gentlemen, thank you very much. You may not be sexy, but your project is quite fun.
Thank you.
You see, this is why I was against women in the mining industry. Now we talk about the sexy men. I mean, what happened here? I mean, you know, when did this come to be a thing? I've mispronounced every name, so I'm going to stick with the mispronunciation of names. So we're now going to listen to Naruhas Iron Project in Namibia. Sheron, Sheron, you can come pronounce your surname. I won't make you pronounce my full name, so if you don't mind.
Sure.
Even ladies get only 10 minutes, eh?
Okay. Good afternoon, everyone. Welcome. So I'm Sheron Kaviua, the project
Kaviua.
Herero from Namibia. The project I'll be presenting today is the Naruhas Iron Project. It's a greenfield project, but with detailed information. My position currently, I'm a principal consultant for Micromine. Micromine is the next generation mining technology, basically offering you a full suite integrated software from database to resource modeling estimation, as well as your planning package as well. So for this presentation, because it's mainly a greenfield project, although detailed metallurgical work has been done, I'll mainly focus on presenting the geology as well as the mineralogy and available data of this project. Now, the Naruhas Iron Project is on EPL 4209. It's exactly 60 kilometers south of the capital city of Windhoek, a significant deposit waiting to be unearthed. Currently, the environmental clearance certificate is in place, as well as the ancillary right agreement. I've indicated that it's a greenfield project, so the project does not have any official resources or reserves that were declared. However, the area is well mapped with very good geophysical information, but limited drilling data.
Sheron, if you want to, you can also perhaps use that screen just for, yeah. Sorry.
Thank you,
to
that
interrupt.
makes life easier.
Yeah.
Good to have a sexy man next to you. All right, so I'll share a little bit about the history of this project. And I've indicated that the information is brownfield. We've done a bulk sampling exercise and detailed mineralogical as well as metallurgical studies. And I'm happy to report that currently the EPL 4209 is valid. It was renewed on the 19th of February 2024, and it is valid until 8 February 2026. Just the timeline of this project, the EPL was first issued in 2009, and 3 EPL renewals were done subsequently. And in 2019, the investors did, prior to that, few drilling and tried to apply for a mining license application, which was lodged with the Ministry of Mines and Energy. However, in 2022, the mining license was declined due to limited drilling data, as well as limited geotechnical data. However, in 2024, the EPL was renewed, and it is valid up until 2026 is highlighted. So this project is within the southern zone of the Damara sequence, which is part of the late Proterozoic Damara orogenic belt. The terrain is known to have economic mineralization, mainly copper, silver, zinc, iron, gold, and nickel, and most of the other deposits have been mined before. So where we are in the stratigraphy, these rocks are 750 million years old, not as young as I am. And the iron formations are hosted within the Naos formation, which is mainly within the dimictites and a schist. It is underlined by the Blaukrans quartzite and overlined by Zamora dolomites and the Melrose schist. And just structurally, it's a structurally complex area, but where the project area is more to the southeast, which is within the Valgras Naos nape. And you would see that the nape does not occur within the main Hakos complex structure, which is an isoclinal fault. And it implies that this package was emplaced later post the isoclinal folding. And it has gone through 3 deformation events, of which details are provided, but in the interest of time, I'll skip the whole structural geology.
Thank you.
The mineralization model, it is structurally controlled and associated with hydrothermal processes that mainly upgraded the low-grade iron deposits, which was mainly 35% iron, to high-grade iron, 60% iron ore. And the main ore minerals are hematite, iron hydroxide, and magnetite. The deleterious elements is mainly quartz and other silicates. Now, At this project, we've dug 6 trenches, of which 4 are being displayed here. And you would see that those are outcropping on surface, and all 6 of them were within mineralization. And this exercise actually can be used for bulk mining exercise. And if you can set up a smaller structure that can already concentrate your iron, you can use that to fund your exploration. So the need for this project is actually capital required to carry out the exploration, as well as upgrade the feasibility study. That is what the investor is looking for. And there's detailed ground magnetic survey done. What you see in red is all the iron formations that have been picked up in the area. And it coincides very well with the remote sensing information in the area as well. And based on the limited data that we have, we've only drilled 25 drill holes, reverse circulation, no diamond drilling were done. And the targets were mainly targeting the iron formation to understand the grade distribution of the iron. And the northern part of the EPL has been covered with 100-meter spacing grab samples, of which 74 were within the iron formations, and those were analyzed and included in the internal model that was built. And what we also acquired from the Ministry of Mines and Energy is high-resolution magnetic data. And we've used the available information, which is the grab samples as well as the boreholes, to model the iron formation, and that's a 3D model of the iron formation. You would see that the area is extremely structural controlled and highly folded. And the way forward for this project is to fund the exploration project, because the iron formation are already well delineated from the mapping exercise. A quick exercise would be to carry out a 15,000-meter drilling program. Roughly, you are looking at, in terms of rands, less than 50 million Namibian dollars to invest, and then upgrade that known mineralization either into inferred, and part of it can be upgraded into indicated, so that you can update the feasibility study and hence reapply for the mining license. And as indicated earlier, there is an opportunity for bulk sampling as well. So in conclusion, this is a significant deposit in Namibia waiting to be unearthed, and the opportunity is up for grab. The owner of the EPL is Jack Rimor. He's a South African, and those are his details. Myself, if you are looking to get me at Micromine, an integrated mining software solution that I can offer. But otherwise, please contact Jack Rimor for this project.
Thank you very much, Sheron.
Sure.
Guys, you know what to do. A quick, just off on a slightly different tangent. Can I see, if you're not embarrassed, anybody who drives a Prado? Toyota Prado. Now, one of you two guys is on trouble. I also drive a Prado, but I'm not the guy. HD 67 LWGP. Your car is parked where it shouldn't be parked, please. Neither of you. It's also not me, eh? Okay, so we're innocent. When I listen to you geologists, I don't know whether I look at that and I think, wow, that's spectacular. That's geology I could get my mind around. Then I think back 45 years ago, the geology classes, I walked out, I went and I played bridge in the cafeteria. And I thought in terms of life skills, that was much more useful than geology, personally. But so this geology stuff is hectic. I mean, there are some geology questions. You can imagine these geologists.
Yep.
Eh? Let me change. So no Prada owner here. Are we sure? Apparently it's causing big troubles downstairs. Let me find the questions. How does Naruhas compare with Dordaba's iron project?
It's a different mineralization. I believe that it's the Dordagas, I believe.
Dordagas, yeah.
Dordagas deposit is mainly magnetite, and this is hematite, so more oxide.
And can it be shipped without upgrading the ore?
It can be, especially the super high grade or 60% iron.
Despite, sorry, I'm reading the questions, I don't understand half of this, as you can tell. Despite the structural complexity, what is the continuity and area of the lenses of the iron formation units?
So where we've indicated the delineated iron ore, that's about roughly 100 million tons. There's good continuity. And then you would see that the area is also extremely underexplored. So huge continuity to kickstart the first operation here.
You did touch on grade. The question is, what is the average grade of the iron formation?
At this stage, it would be safe to say 45 to 50%, but the super high grades are around 60% iron.
Thank you very much. For the record, there's some 45 people online still. I'm sure all the geologists are sitting there typing away. Let's show Sheron how we look at this project from this audience. Obviously, it's at the let's wait and see phase. Please keep on telling us about this. Definitely not investing. So far, that's the highest number. That may speak to, who knows what it speaks to, where the project is. Thank you. Thank you very much for joining us. Thank you, Sarah. So I've now tried to guide Johan to 10 minutes, tell us that you're going to do lots of testing and you're going to scale it back to a small mine. So let's see if you've ever, any of the advice you've got so far has landed. Welcome back. It's good to have you back.
Thank you, Bernard. It's actually great to be here. And seeing that we missed out earlier this morning talking about platinum. Of course, our project is situated on the eastern limb, and within current mining operations, so good infrastructure that we have there. And we explored for the 6 PGMs plus gold, and also nickel, copper, and chrome. The shareholder structure is still very simple, with 2 shareholders in the underlying project. The capital structure, not much change since our listing. Of course, we listed on the ASX, the Australian Stock Exchange, and also here at the JSE, 90 million shares. Shares are still fairly tightly held, 79% by the top 20 shareholders, and management still have a reasonable big stake in the project. We now drilled in the order of 30,000 meters and over the past 2 years, and now have quite a significant ore body, 40 million ounces in measured, indicated, and inferred, and that is both on the UG2 and Merensky reefs that we have on the property. So a world-class resource that we now drilled out. Of course, if you just look at the value, and these are for the analysts that we have in the audience, $0.66 per ounce. That is dirt cheap. And it's just amazing at the values that the current project sits. We are glad to announce that just recently we were issued by our environmental authorization, so that is paving our way to the mining right. Our focus has been on the UG2 specifically. The Merensky will remain in our back pocket, and focus was on the shallower areas of the one farm, so more towards the east, where we have measured and indicated at just over 8 million ounces at a grade of 9.89 grams per ton over 73 centimeters. We completed our PFS, and last year announced our Maiden ore reserve, sitting at 6.29 million ounces. So again, a significant ore body. If we compare ourselves again on an EV per ounce basis, but this time on a reserve basis, you can see there is great potential for further re-rating. Our study that came out end of last year is fantastic results. I think if you look, and I just want to focus on one or two key numbers here, at an NPV of 8% real, just over $1 billion. It is a significant and great project. IRR 28%. And that was done at fairly conservative prices. If you look at the basket price at the moment, it's only 6% below our price that we use here. Our basket price was 1.5, and this is currently, as we know, still very depressed PGM prices. So you can imagine what the upside of this project is. Two other focus points, all-in sustainable cost, sitting at $800 per ounce. That places us right at the end or bottom end of the cost curve, and that is a real cost based on the unique geology that we have on the project. Our peak funding, of course, that is in this current economic environment a big number, a big project, and unfortunately have big capex. So $450 million for this project. So what we're currently doing is to look at optimizing this project, and basically two things is reduce upfront capital requirement, and that work we aim to complete still in June. So by the end of June we'll have that out, and that will lead to significant reduction in capital. And as Bernard, as you said earlier, one need to adjust and adapt to current economic environments. So what we're looking at here is, of course, typically what's been done in these circumstances, and that is look at a stage project. We also look at another item, and that is accelerating the time to production. Of course, your ore body dictate how you mine, and we're trying to get us into production as quickly as possible. I have to say something about the commodity. It's a sexy commodity, I think, at this point, with huge potential. And last week was Platinum Week, and I think for the first time in a very long time, everyone is talking the same language. And that is that we're moving into a structural deficit with significant shortages in PGMs. We've seen demand growing at a steady 3% to 5% over the past couple of years. But on the supply side, we see supply in South Africa contracting, and that is starting to bite into that demand situation where drawdown for platinum and specifically need to come from stocks. The same is happening in rhodium. The same is happening in ruthenium. So all these metals are moving into supply deficits. Palladium is the other metal, probably less of a cause of concern, not a cause of concern, because we are southern palladium, but nevertheless also forecast to be in a deficit this year, but less so than the other metals. So we are looking just at the basket price there moving up, and hopefully that will continue. If we just quickly look at our milestones and what we need to achieve, as I said, we are looking at that PFS update and optimization, which will come out in June, a major milestone. We now looking forward to our mining right to be issued, hopefully by this quarter. And of course, the other work with the DFS is continuing. There is still some work that we need to do, but we're looking at FID in 2026 and execution at 2027. These will, of course, slightly change with the studies that we're busy with at the moment. So in summary, we're certainly sitting here with a world-class deposit. It's a large resource, big reserve, And also in terms of access of this ore body, it's a shallow ore body, quick access via declines, and despite its capital expenditure, it's relative low to some of our peers. Strong project economics, I mean, these are standing out with still lower prices that we used. And corporate and social responsibilities, that is in place. So all in all, this is an excellent value investment proposition at this point in time. And I think just the EVs per ounce that I showed here showed that there's still some significant upside in the PGM industry. Thank you,
Danke, Johan.
Bernard.
That's how you sell a big project in 8 minutes. And now you've woken up all the miners. So these are questions even I can relate to, eh? What is the depth of your ore body? How do you plan to get there?
Yeah, the access at the on the eastern side is basically 50 meters that we'll be able to access the ore body via decline. There's two declines that we looked at in the bigger project, one to the north and one to the south. And currently we are looking at how we're going to go forward with that, and we'll probably scale down in terms of a number of declines.
What mining method is planned for the UG2 reef?
Yeah, we looked at various options on mining the UG2, but we'll stick to the normal hybrid mining, and that is typical mechanized development, and then, of course, conventional in the stopes. That is trial and tested.
The question is declaring grade at 7 fair. What is your pearl split? You showed the pearl split. I mean, I took your grams per ton at your width divided by 120 and got to 6 grams.
Yeah, very important is that what is very interesting at our ore body, if you go further north to our neighbors, you'll find that the UG2 have chrome stringers in the top. And what happens with those, with the hanging wall, is that of course collapse. And you'll find that the mining companies to our north mine at around about 120 centimeters.
Yeah.
Now, the PFS, we did at 1 meter. And the reason is that there's no chrome stringers in our hanging wall. The geotechnical assays and results that came back confirmed that the hanging wall is solid hanging wall. So that's great for us. And that leads to that significant grade that we can deliver to the plant of 6.15 grams per ton.
What is the modeling between Merensky and UG2?
250 meters.
250.
Yeah.
These are not my questions, although I love all these questions. You can see I can relate. How does the reserve grade of the project benchmark against the other UG2 operations in the vicinity?
The reserve grade.
Yeah.
Reserve grade is higher, and the reason for that is, as I explained, it is because of our unique geology.
I'm going to have to stop this guy. He's worse than me. We now at the dip and the this and the that. Take him offline, take a room, talk, with him in private, okay. Who will do the refining? Implats, Amplats?
Yeah,
normally we sit here and we've got Nico and we've got Valterra and we've got Sebanya, and then they all say we're not doing anything, and then we ask you the question. So
Bernard, I think, I just want to start to say what opened my eyes for South Africa is that we have this full downstream beneficiation in South Africa that I think a lot of countries don't have. I think also in terms of our concentrate, remember we are on the eastern limb, slightly different to our peers who is developing further up north. So I can say that I did sit down with the majors, and it's positive. That's all that I can say at the moment.
Good. Can I ask if you guys have expressed your views there? So, are you sorry you called yourself Southern Palladium? We all got sucked into Palladium, I mean, Anglo Palladium, Impala Palladium, never follow a bubble, eh?
Bernard asked me that exact question, I think, 2 years ago.
And?
Well, I got a proposal to call it Rhodium at some point.
Yeah.
Certainly something that we have discussed and looked at. But yeah, you know, a name stick to what people know. And, you know, I'm still fairly confident in terms of, you know, we need to start looking at the PGMs as a basket. These PGMs are so unique in their characteristics. We've seen it in both platinum and palladium in the autocatalyst industry, that they substitute each other. And I think what we're going to see is that platinum and palladium moving in tandem going forward. The name change, we can...
Listen, when you get good results, stop. I mean, that's what I kept on thinking when that team was there in the White House. They all should have stopped a minute earlier. Just stop talking. When you're ahead, stop talking. Okay, so you're ahead.
I'll stop here.
Final question. I mean, you've so drilled that ore body. On the one hand, you can just chart it up and blast it. On the other hand, are you taking all those core samples out of your reserve declaration? Because you've drilled that ore body out there. Off you go. Go.
Thank you very
Johan,
much.
bye, donkey. Thank you very much. Now, if we can get Paul Muller to do less self-promotion, we may actually finish on time for tea time. So, Paul, you're cute, you're smart, you're clever. Just give us your analysis, okay?
Not a chance. Okay, I have a poll that I'd like you all to take, please, if we could tee that up. Very important, this. Okay, I want to know where you spend your time and money online. Okay? And your options are, you spend most of your time and money betting on sports, speculating on shares, trading crypto, what's another one? Trading on marketplaces, or you'd prefer not to say.
Which,
You
in other
have
words,
to
is porn.
choose one of them.
In other words, that's a porn site. No.
I didn't think that for a moment. I'm surprised you came up with that, Bernard. Okay, so what do we have? We're at a junior mining conference. Junior mining is one side of the coin. The other side of the coin is capital markets and capital markets development. You're all here to explore junior mining, and you spend most of your time trading rubbish online, buying fast fashion on Bob's Shop and Facebook Marketplace. Only 23% of you actively trade or speculate in shares. What does that say about what we in Southern Africa, you know, who are actually interested in junior mining, do or care about? Okay, I'm a little worried about the 14% of you who won't admit what you do online. And we've got some who do crypto investing, and funnily enough, only 3% of you say that you participate in online gaming, and yet in South Africa, the most searched sites of any, including what Bernard mentioned earlier, are gaming sites, betting sites. We allow South Africans to bet on anything except junior mining companies' chances of success. Okay, so that's the point. So I would like all of you who don't have an online trading account to please go and sign up. You can sign up on Easy Equities before the conference ends. You can do it now. Okay. And actually, instead of spending your time on some of these other things, let's actually support our own industry, even if it's just with your pocket money. Okay. The themes I'd like to cover. So thank you for that. The themes I'd like to cover quickly here are the stories. I'd like to tell two little stories of riding on coattails, because I think it applies to the companies we've heard from today. We're going to talk a bit further about uranium, and then I think I've got some questions or stories to tell about UG2. Copper in the northwest of Zambia has to be a story about the late Philip Pascal, the founder of First Quantum Minerals. He was a son of Southern Africa, brought up in Zimbabwe. He studied abroad, but he returned to South Africa and worked actually as a mining engineer, I think it was, or geologist with E.L. Bateman. He got an MBA from the University of Cape Town, and when he left South Africa, went on to work in the mining industry in Australia, founded First Quantum on a new resource in northwest Canada, the Kinshasa mine, and he brought a lot of Southern Africanness to it. His family grew very wealthy. He had a lodge on the Zambezi River, got a magnificent wine estate in Franschhoek, a real son of Southern Africa, done good, despite the fact that everyone thinks of First Quantum as being an Australian or a Canadian company. But the important thing is he did not believe in fly in, fly out. That was the Australian model. So in Solwezi, they've basically built a city, freehold bonded housing, hotels, golf courses, management housing, the full in private schools, low-fee private schools. They use local medical facilities that the mine funds that are also available to the communities. Philip Pascal did not believe that in Africa you could fly into an airport, discharge all your skilled staff, and fly them out again at the shift or at the end of your week or 2 weeks on the mine. Quite different, funnily enough, to Lumwana, which is also in northwest Zambia, where families lived in Lusaka and the management flew into the mine. So that was very different. And the reason I make that point is that Kulumbila has an industrial area. It's got bonded housing, it's got a hotel, it's got hospital, clinic facilities. And that's what makes the Prospect Resources project there one that's riding on a leader's coattails. Someone who started off as a junior miner, grew a huge company, and they can go there and benefit from that. First Quantum built a 600-kilometer power line. They rebuild and maintain the roads. They've provided all the facilities that make the next generation of juniors that much better off. And I would be a bit concerned about the geological concept of neurology if it wasn't for the fact that First Quantum's actually invested in the project. So that's a fantastic big tick next to it. Not only have they provided all the infrastructure access because of a different way of building mines. I mean, Lumwana still has a camp for its staff inside the mining right. Enterprise Sentinel has a whole town that it's built. It's a very different approach, and I must say I think First Quantum is a model that we can all follow. Moving on briefly to uranium in Namibia again. I think there we must remember we're going into a different world now, and it's analogous perhaps to the 1950s when the Cold War was driving uranium. And we mustn't forget that the gold mines in South Africa, when they built their uranium plants to produce uranium in the 50s, that was paid for by the Americans because they wanted the uranium for defensive purposes. And that went off and was used in the Cold War for effectively nuclear armaments, right? And I think we might be going to something similar where it's not going to be about the spot price. It's going to be a strategic imperative. It is a critical mineral, and we might well see funding being provided in return to offtake. So I think the uranium space is going to be fascinating to watch. What I would like to, while I'm speaking to a Namibian company, I did a quick count, and I worked out there are actually more junior mining companies listed, dual listed, to be fair, on the Namibian Stock Exchange than there are on the JSE. Okay? So, and I listed some of them. If I can just find my... Forces is, Bannerman is, I think there's an Elevate, there's an oil and gas company called Recon Africa, Corex Copper's there. There are actually more there. But what's interesting is the NSX and the JSE are on the same trading platform, and they're on the same settlement system, and they're within exchange controls. So there's actually no reason why the million Easy Equities customers, for example, couldn't look to those shares if we could just get the financial plumbing right. Now, there's a problem, of course, in that the UK and South Africa are in the same time zone. There's about an hour, I think an hour and a half overlap with the Canadian stock exchanges, but there's no overlap with Australia. And, I'm not sure what the answer is to that. One further comment. As an ex-banker, heap leaching scares me. And I tell you why. It's because the residence time on a heap leach, if it's not built as exactly as it was in the lab, and you haven't taken incredible care, 22 days residence time can rapidly become 44 days residence time. And from a mining banker's perspective, that doubles your working capital requirement. So I just want to say, please have a good answer to that question when you're looking to raise your money. Talking iron ore in Namibia, I must say I'm more familiar with the Dordabus project, and it's going to be a story there about the cost to upgrade, and then the cost of logistics. And unfortunately, if there's a project closer to the port than yours, you better hope that you've got a material grade improvement before you can compete. Southern Palladium, and this is where there's another example of riding on coattails. Just as the northwest of Zambia will ride on the coattails of a great leader who started out as a junior miner in the form of the late Philip Pascal, what a lot of people don't realize, that the entire UG2 industry in South Africa rides on the coattails of one pioneering entrepreneur, and that's Lucas Perulis. In 1987, in an environment where the Chamber of Mines was actively hostile to junior miners, the major mining finance companies in South Africa, and this is way before the end of apartheid, were actively hostile for decades. They did not want, how dare you compete with us, right? Anyway, he, in the teeth of that, secured a property, and it had UG2 only. And he had to develop the technology to take the chrome out so that you could smelt UG2 at proportions of greater than 15% to Merensky. So before that, you had to mine Merensky, and you could dilute it a little with UG2. But if you went too far, it messed up the smelting. I don't know the correct technical term. He pioneered using dense media separation in his own research labs to separate out the chrome. And the chrome was fine. And at that time, there was no way of people hadn't developed agglomeration methods to be able to use fine chrome. So the chrome reported to the tailings facilities, which are now being reprocessed. It was thrown out, and the PGMs could then be smelted. He pioneered that, and all these later opportunities, all of them, including agglomerating fine chrome, the fine chrome industry we have today, the production of chrome from UG2, the fact that we can have whole mines that mine only UG2 was because of a junior, someone who was forced to innovate because he had no alternative. And I think that's all credit. There are coattails that we all ride on here. And I think that is the full slate for the moment.
Mr. Miller, bye donkey. Thank you very much. Thank you. I remember traveling in Australia many years ago. Long time ago, 25 years ago. There where you shouldn't go, Kalgoorlie, where only gold miners and other people go. Yeah. And it was actually a cricket World Cup. Now, the Australians play cricket, not well, but they play. They love cricket. And I was looking for a place, obviously it had to be a bar, where I could watch the cricket. And the bastards were watching horse racing. I mean, and anything that you could gamble on, bet on, you know. And that was, you could not talk anybody into switching over to the cricket and a cricket-loving nation, because they were all betting on the races. And I often thought that, like, this culture of taking a chance is not in the South African DNA when it comes to investment. I mean, we grew up, we handed our money over to somebody who managed it for a huge fee. They get rich, and they tell us why we don't get rich with them. And this direct access, I mean, this is why the platforms that are opening up, this is why my young 19-year-old son is more active in that space than me, because I think we need to open up our minds, and we need to support junior mining, and we must, and this is high risk, perhaps horses are safer than some of these juniors. But I personally do think if we don't create a capital market, we will not fund this industry of ours. Anyway, Paul Miller is here to do the sermons and the history lessons. I'm just here to have fun with you guys. And the next best fun we could possibly have with our clothes on is to go for tea. So let's go for tea with our clothes on. Okay. Thank you. Half an hour, right?